It's time now for business. We welcome Kate Moody here for the Business Bulletin. Great to see you, Kate. As always, the US Federal Reserve has confirmed it's not moving interest rates, but ongoing tensions with the Trump administration are center stage. Kate.
Well, Mark, there was no surprise here in terms of monetary policy, no change to that key interest rate, despite huge pressure from the U.S. President Donald Trump to bring those rates down for what would have been a fourth consecutive time. The federal funds rate is set at a range of 3.5% to 3.75%. Policymakers said that current economic conditions, including a fairly soft jobs market and inflation that's still well above the 2% target, mean that no further cuts are currently warranted. Now, most economists expect 2 rate cuts this year, starting in June. The Fed Chair, Jerome Powell, said the board would continue to make objective decisions.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people.
Slightly more pointed language than usual from that opening line there. The White House has repeatedly called on the Fed to move faster in lowering interest rates, and that has raised concerns about the bank's independence. Now, issues that aren't related to policy have raised the stakes of this week's policy meeting. Fed Chair Jerome Powell is the subject of an ongoing criminal investigation into his statements about the renovation of the Fed building. When the probe was announced nearly 3 weeks ago, Powell said he believed it was a politically motivated pretext to influence the rate decision. He declined to comment any further on that matter this Wednesday. The Supreme Court is also currently considering a case about Trump's firing of Fed Governor Lisa Cook over allegations of mortgage fraud, which she denies. Donald Trump will also soon be announcing his new choice to replace Powell as head of the Federal Reserve. Powell's term expires in May. Trump has backed off rhetoric about trying to remove Powell early, but he did say this Tuesday he would soon be choosing a nominee who's more in line with his own vision for monetary policy.
And despite a bad Fed chairman, a guy that has we call him too late. He's too late. Jerome, too late. Powell, he's too late. By the way, when we have a great Fed chairman, I think we're going to have one. I'll announce it pretty soon. You'll see rates come down a lot.
Now, Powell did repeatedly brush off most questions about those ongoing legal issues, as well as his own plans for the future, and recent volatility of the U.S. dollar. He did, however, defend his decision to attend last week's Supreme Court hearing on Lisa Cook, a choice that had been criticized by some in the Trump administration.
That case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend.
Jerome Powell speaking on his decision to attend that U.S. Supreme Court hearing last week. Well, the U.S. dollar has steadied this Wednesday after dropping to its lowest level in 4 years. The dollar index, which tracks its performance against 6 major currencies, has lost about 2.7% in just a week. It's the biggest slide since last April. Now, some of that slide is linked to recent comments by the U.S. president, as well as broader concern among investors about their exposure to American volatility. Brian Quinn reports.
The greenback on its back foot. As the U.S. dollar continues to lose ground, President Donald Trump says he's not worried.
I want it to be just seek its own level, which is the fair thing to do. You could have it. I could have it go up or go down like a yo-yo.
Tuesday brought the dollar's steepest decline since Trump rolled out his Liberation Day tariffs on global trading partners last April. Set against a basket of 6 other major foreign currencies, it's now at a 4-year low, though still high by historical standards. A lower dollar means American goods will be cheaper for foreign buyers, a potential boon for Trump's plan to revive the country's manufacturing sector. But the greenback's decline reflects an ongoing loss of confidence in U.S. leadership on the global stage. Trump's insults and threats towards European allies over their opposition to his plan to acquire Greenland, his attacks on the independence of the Federal Reserve, America's central bank, and America's mounting national debt, exacerbated by tax cuts and spending hikes in his One Big Beautiful Bill, all are factors that have helped push the Sell America trade, in which investors and traders unload U.S. Treasury bonds, equities, and the dollar. The uneasiness on financial markets also reflected in the price of gold, the quintessential safe haven asset, whose price has now surged to record highs.
Fashion Week is underway in both Paris and Copenhagen, with luxury brands showcasing their haute couture collections for the coming seasons. But traditional designers are facing growing competition from ultra-fast fashion retailers that have transformed consumer behavior and expectations. Yuka Royer reports.
Summer has arrived on the runway. Dior, Chanel, and Valentino. Iconic luxury fashion houses unveiling their light and colourful new collections with traditional elegance. But they're no longer the only trendsetters in today's fashion world. Ultra-fast fashion giants like Shein are increasingly using AI to track trends on social media, come up with new designs, and have them delivered faster and faster.
This is a business model that differs dramatically from the established fashion industry, where time, effort, and resources are invested in developing creative designs.
The global fast fashion market is projected to reach $178 billion in 2026, according to Fortune Business Insights, chipping away at the luxury apparel sector that has been seeing slower growth in recent years. Fast fashion brands have long been accused of fueling a culture of overconsumption, as well as distorting competition.
The problem with ultra-fast fashion operators is that they've found a loophole in European legislation. They've registered themselves as a social media platform, which means that they cannot be held accountable for the products being sold.
Governments have moved to rein in ultra-fast fashion. Last year, France passed legislation aimed at curbing the sector's carbon footprint by introducing an eco-tax and eco-score on fashion items. The government also recently asked its textile recycling agency, Refashion, to propose a stricter penalty framework for ultra-fast fashion platforms.
That's all for now, Mark.
Some of those models looked elegant, but not as elegant as you.